After the market has produced an indecisive trading range all summer, not only an indecisive trading range, but note how each trading day was indecisive, with little hammers or dojis or spinning tops, showing that there wasn't any definite pressure from the bulls and the bears. Recently, the volatility has picked up, but the decisiveness hasn't. You've had big down days, big up days, big down days, big up days. Currently, the Dow is showing that it's still in a downtrend, even though it's not that prolific, because it's trading below the T-line. The same scenario can be applied to the analysis of the NASDAQ, which got back up above the T-line, but is not really going anywhere with any great resiliency. You can see how the big piercing signal told us that probably the 50-day moving average was going to act as support. And we're trading above the T-line, but not with any great energy. So with this combination of analyzing the NASDAQ, the Dow, and the S&P 500 continues to indicate that we're just moving sideways. There's no uptrend or downtrend to this market. So this is where the identification of candlestick patterns becomes very useful. As we can see in this big fry pan bottom, that we started having a breakout right about the same area where the fry pan bottom started. Notice what type of signals started moving this move. Bullish engulfing signal, followed by a doji sandwich. What do we expect from a doji sandwich? More upside. And then a big breakout. That's what we're anticipating coming out of a fry pan bottom. Our recent recommendation on LMCA or LMCK was the same, coming out of this fry pan bottom, and also notice the little bullish engulfing signal bouncing up off the 50. This tells us there's investor sentiment building up with great strength, producing some very strong price moves. And the bobble breakouts are very easy to identify. It's when you have a strong price move. You hit a resistance level. It pulls back, and notice what it can't do. It can't close back below the T-line. The T-line pushes it back up through the resistance level, call it a bobble breakout because it's kind of bobbling in here. And when it breaks out, wave 1 and wave 3 will usually be the same magnitude. And this will occur with a high degree of probability. That's based on the reoccurrence of candlestick signals, showing how human nature works the same time after time. That same scenario can be applied to INVN. Over here, it failed at the 200, pulled back, basically used the 50 as support, and has come back up through the resistance level a second time. We recommended buying this one on Positive Trading today. It can still be bought with the anticipation that if this is wave 1, wave 3 should take you up into the $10, $50, $11 area. That'll be it. We'll see you in the chat rooms.